Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So let's take a look again at the euro currency. Finally, we have some action here. The market shows some move to the downside finally and have resolved this riddle that has been forming here for a significant period of time. You can see almost the 2 weeks in a row market stands in this tight coil. And now we see that by yesterday's action, market has hit our predefined target of this initial ABCD pattern. That is 1618 extension of that pattern, ABC bottom, ABC top, 1618 extension. Well, so our assumption that since market hasn't proceeded high with double repo buy pattern, then probably it will show the opposite move, because as I said yesterday, double repo is the best pattern and furious. Usually, if this is the real double repo, market shows the opposite move very fast and with solid acceleration. If market stands flat after the double repo, this tells that something is wrong, that something is happening here that is not quite in a row with the pattern. And that we see. For us currently is the major question: will we see the pullback to the upside? Because from the Judd-Napoli point of view, from Judd-Napoli framework, we have double repo failure. That is confirmed, and that is the bearish directional pattern. And following the double repo failure, we have to enter on the short side of the market. From the other point of view, we are at major target and the weekly confluence support area. That is significant support. We also stand slightly higher, and 10 pips higher than the yearly pivot point. That also hasn't been touched yet by the market. And that is also, you can see, coincides with the target of this lookalike head and shoulders pattern. That's usually the distance from the top of the head to the neckline, counted from the breakout to the downside. It's points on the target of the classical target of the head and shoulders. So, how we could combine such different moments and to not take wrong position, to not take the loss with this environment. Also take a look that here some sort of the bearish dynamic pressure is forming. Since you can see market just creeping down with the MACD predictor line by holding trend bullish. So that is really bearish development here. So what we could do in this environment? Well, usually when you have such difficult situation on the daily time frame, it makes sense, and that is the common solution for this riddle, is to find some pattern on the intraday charts that you could stick with. And even if you will wrong in the assessment of situation on the higher time frame, for instance on the daily time frame, what if market, for instance, just continue move to the downside? That could happen. Very often market shows that such price action with absolutely disrespect of significant levels. That is sometimes happen on the markets. What if this will be the further development? How we could deal with it? But if you will find the pattern on the lower time frame and will monitor this pattern on the intraday chart, very probable that the point of reversal of this pattern, when this point, the triggering point of this pattern, market still could show some small bounce that will not be seen on the daily time frame. And that bounce will let you to move your stop to the break-even and protect your position. Because if you will be right, you could get the significant retracement back up to the approximately 130 to 50 area. That is the 3.8 resistance of the whole swing to the downside. That is possible. If you will be wrong, you probably will lose nothing, or your loss will be just rather small. That's the major task for us. So the first part of our trading plan has been completed. Market has touched finally the 1618 extension. So in fact, if it really intends to show the retracement, it has no reasons to continue move significantly to the downside because all targets had been hit already. Market started significant support, so that is a nice chance to show the pullback. On the 4-hour time frame, in fact, we see that just market has hit the weekly pivot support one as well. Trend has turned bearish here, and just retesting the upper border of this parallel consolidation. But here I do not see any patterns just yet. So if we assume that market will continue to move down and measure this distance of this coil, counted to the downside, we will get approximately the 128.18 level that market could hit. But that is not correspond with our hope that market still will show some pullback, will show some retracement to the upside. From that perspective, I offer you to look at the hourly time frame. What we see on the hourly time frame? First of all, take a look that in fact this move is the continuation of that move, since that was expansion of the market, it's acceleration, impulse move. That you can see very sharp and sloppy price action with a lot of overlapping candles with long shadows, candles very small itself, so that was the retracement. That you can see continuation again. So we have ABC top pattern with the market has hit 1618, it's right here, that was precisely at the previous low. Move lower shows ABCD retracement to the upside. Small retracement, just the 3.8 resistance of the CD leg to the downside. That is normal. When the market hitting minor 618 extension, the small retracement is acceptable. Now, if it will proceed further to the 100% extension, that is approximately 129.96 area. And that will be the completion point of that ABCD pattern. Market by this move as well will touch the yearly pivot point. Also, take a look. We have some sort of the butterfly. It's a bit not quite clear, and maybe it's not absolutely reasonable to call it as the butterfly, but still, if we measure this extension, recent extension counted to the downside, we'll see that market has stopped right at the 127 extension, shows the retracement. The next extension stands 129.80, very close to the just 10 pips difference with the target of this ABCD pattern. So I suppose that we should be focused on this area. It's 129.80, 129.95 area, where we should search for the possibility to enter on the long side of the market. Also, I'd like to check another moment. Just I have missed it. Just a moment. I want to measure this swing up. What we get? Take a look. Interesting. That is 1618 extension of that small move as well. So maybe market will form some sort of the head and shoulders here. Who knows? That could happen. But that is the level that we should watch for, I suppose, because there are two different patterns completing here. Market also will touch the yearly pivot point and will get support from this area. So I suppose that we should be focused on this area, because looking at this level, it's a bit not quite safe, because this move was really fast, and market probably this move is just a retracement. So that is the hint on the potential continuation, because market by this move exceeded the 618 minor extension and taken out of these lows. So that is acceptable, that if you will for instance take the small position, very small lot of the long trade right here, with the hope that market will start move to the upside right from this area, that we can't exclude it totally, but I think that more reliable level stands around this area. Besides, here you will be able to place tighter stop, because that will be the completion point of both patterns. Market will hit all targets. I suppose that the stop around 37-40 pips will be significant. Will be sufficient for entering at that area, because if market will fail there and continue move to the downside, then we will capitulate and said that probably retracement will hardly happen, and probably market very weak, shows the real weakness, and market will move without any respect through the weekly confidence support that sometimes also happen. So we, in this case, we will have to say that probably retracement will not come. But here, still 128.80, 128.95 area. I suppose that the area that we should watch for is the potential and final, the last level, I suppose, where we could get the retracement starting of the euro currency.